Hi everybody, it's Alyssa Katie with the Greater Hewitt Chamber. We are here back with some business and just tips for anybody that's going to be looking to purchase a home. And today we have a special guest with us, Chamber Member, Community Bank and Trust. We have Carol Pilant. Carol, how are you?
I'm good, thank you.
Good.
Thanks for having me.
Yes, thank you so much for joining us
I'm
today.
excited to be here.
Yes, we're all excited to hear your tips and tricks and just learn more about the industry and what to look for, how to plan when you're purchasing a home. We also wanted to give a shout out to our sponsor, which is brought to us by Weber Electronics for our video series. So we'll just jump right in. So as mentioned, we're talking about purchasing a home. So what would be the first step when you're going through that process?
I think the most important first step is to find a lender that you're comfortable with. You're gonna be working with them for quite a while, so I would say you really need to be comfortable with them. For us, we hope that you choose the bank, and if you come by, we'll be glad to sit down and talk to you and get started.
Great. So I'm sure this is probably the most frequently asked question. How do you know what you can afford?
Well, there is some ratio analysis type stuff that we can do. On our website, we have some financial calculators that help you figure out how much payment you should have, and then how much money, of course, you need to have left over at the end of the month for other things. So that can be all part of that first process of just coming in, sitting down, and visiting with whoever your lender is.
Okay. And then I guess once you've thought about those things, how do you really know when you're ready to make that purchase?
Well, I think it's very important to consider your total debt situation as it is. Think about your credit. Is it where it really needs to be in order to buy a home? You need to not have any issues on your credit, and consider your life. How long are you going to stay in that property, and are you going to stay in town long term? So just those kind of questions. Mostly probably credit in your debt situation.
It's going to be the number one.
Oh, yeah.
Absolutely. Now, what about saving for a down payment? What do you recommend, or what's required?
Well, that depends on the program that you use. There are several programs out there. Some of them, 5% down, up to 20% down. If you have the 20% down, then you're not going to have the PMI insurance, which is really an insurance policy that insures the lender for those less than 20% down payment type loans. And that for you is a monthly expense. So if you can put more down, if you can do 20%, you actually save yourself a lot of money on a monthly basis.
Definitely, absolutely. So if you have, if you're kind of coaching or working with someone and they're working towards that point, do you have any tips on how to save for that down payment?
I think it's all a matter of budgeting. Set that budget. You know what you have coming in every month. Kind of watch your spending for a couple of months and see where there's areas you might can cut back, and wherever you can cut back, put that into a savings plan. And if you have a bonus or tax refund, of course, save that as well. And if you get a raise, save the difference. It's not going to happen overnight for a lot of people. I mean, some maybe, but the majority it takes time.
Yes.
But just make that budget and really make sure you stick to it. You'll get there.
Yes, I know sometimes, at least with us, it was, of course, well worth it, but just take that discipline it takes to put it back. Absolutely.
Lots of discipline, for sure.
Okay, so let's transition and talk a little bit about using a community bank versus a larger bank. Can you tell us a little bit about how those compare?
Yes, the major difference when you're using the mortgage company, usually you go in there and you're thinking about a 30-year or a 15-year fixed mortgage. With most of your community type lenders, we do it a little bit different. We usually do what we call a mini perm loan, where it's kind of like a 5-year balloon loan. Mm-hmm. So that means that your payment is going to be fixed for the first 5 years. We can do like a 30-year amortization, or 15, 20 years, whatever you're comfortable payment wise with. But generally they're going to be 5, some are 7 years, but a balloon type product. The good thing about that is that we do keep them in-house and we service them.
Oh, okay. That's great. Great news and great tips and why you want to shop local. So would they just come into the bank to apply if they're interested, or do y'all have any type of online application? What does that look like?
We do have a small, right now we call it a loan inquiry. It's just a little short sheet that you can fill out online, and basically it allows us to pull credit report, kind of look a little bit at your situation. Takes you 2 minutes maybe to fill out. But we'll do the credit report, and then we'll contact that customer and talk to them. You're welcome to come in. We have, of course, the paper apps, and we'll sit down and fill them out with you. But we are right now testing, we call it Mortgage Bot. It's a new online, full application. So it's going to be kind of like going to Rocket Mortgage or something. You'll fill it out. It'll pull in things from your credit report. It'll probably take you maybe 15 minutes to fill out, and you'll be done with the application process. That's just
simple.
a month or so away. So
Okay, wonderful. Now there probably are some times when families may struggle. Do you have any advice on maybe what they should do if they're struggling with those monthly payments?
first and foremost, talk to your lender. I mean, the last thing we want to do is see you lose your home. So we work with you any way that we can to resolve any problems. So don't be afraid to come in and talk to your lender and let us help you make arrangements. There are, of course, government-sponsored, like HUD counselors that you can call. There's a couple here in Waco. You'll get a list of those whenever you do have a mortgage loan. It comes out with your loan estimate. You get a list of those people that can help you if you're really, really struggling. But for a community bank especially, I would say just come in or call, sit down and talk with your lender. We're really there to help.
Great. Now let's say you're in your home, and some will purchase the home of their dreams, and then some maybe want to make updates along the way. What would you suggest, or do you have any tips or ideas for the home improvement side of your home?
Sure. There are two types of loans that you can use. One is actually the old-fashioned property improvement loan. Those generally have a little bit better rates than a home equity loan. With the property improvement loan, you'll have a contractor. That person will sign a mechanic's lien with you, and then we disperse the funds to the contractor as improvements are made. After it's all finished, then we put the loan on a payout loan, and you make payments to the bank. But there is some direction in how your money's spent, because those particularly, they have to be done for property improvements. Now with the home equity, it's a little different animal. We can do a first lien if there's no other liens on the house. You can do what people call a cash out refinance, where they actually refinance the loan, get extra money, pull it out to make improvements, pay debts, whatever you want. Or we can do like a second lien home equity loan. On those, by regulation, you can't have more than 80% of your total market value in your loan. So an appraisal's done, and say you owe $50,000 on your first lien, and your house, these are easy numbers, is worth $100,000, then that position, that 80% would be $80,000. So the difference between the 50 and the 80, of course, is 30 that you would have available. That money, you can take it and do with what you want. And part of it can be improvements, part of it can be paying credit cards, taking a vacation, whatever you want. So those are the two ways. But like I said, with the property improvement loan, it's usually a little better rate. Not that the others are bad, just a little better.
But that's better. Yes, absolutely. We always like to save money, that's for sure. So let's talk just a little bit on credit score. So when someone's looking, do y'all have an ideal, of course, score that you're looking for? Is there a range or where someone needs to be?
Well, with credit scores, usually, the higher the score, the better the rate. I would say 700 is probably pretty much your best cutoff. So if you can get to that point, you're going to get the best rate. And you can go annually. You can get a free credit report at annualcreditreport.com. So I would recommend that people pull that and look at any credit issues that you might find. Contact that creditor and maybe see how you can take care of it. Sometimes things happen medical bills especially, you may not get a bill. You may not even realize there's a collection out there. But if you'll pull that credit report, you can do it once a year for free, then that can really help by finding something you're not even sure or didn't know was there.
Oh, definitely. I know it can be scary, I'm sure, for some people.
It can
if you're
be.
not sure and you find something.
Yes.
So let's talk about what about paying off your note faster? Do you have any tips or suggestions on that?
Yeah, just pay additional principal, make your payment maybe first, and as you have extra money, pay on it. If you want to be a little more disciplined, then maybe every time you make a payment, put an extra $50 toward it, or $100, whatever you can do. Even $20, every little bit helps. On ours, if you have a loan with us, you can actually pay your payment online. And what I'll do is just, if I see there's a little bit of extra money in my account, I just go online and make a quick transfer to principal. It's
Sure.
just as simple as that, and takes just a few seconds. So.
Great. Now, what about refinancing? Can you touch on that?
Yes, on refinancing, just your regular outstanding mortgage, not trying to do a cash out refinance where you're getting, money out of it. I would say to, especially if you've had your loan a few years, check the rate, what the rates are now, see if there's a pretty good difference in those rates. Look at the upfront cost, because sometimes it can be sizable, especially, on a secondary market type loan. So I would say, look at what those closing costs are and make sure your savings that you're going to have by refinancing is more than the cost to do it. And that's another thing. You can come in, sit down, and visit with us, and we'll help you figure all that out. But there's several, especially if you're pre-2007, and you haven't done anything, probably need to look at refinancing. Probably have a higher rate than you need to have.
Than you need to, absolutely. And what about escrow? What exactly does that mean in a nutshell?
The escrow account is basically like a savings account.
Okay.
It allows the bank to pay taxes and insurance for you yearly. So what's going to happen is when you make your payment, a portion of that payment is going to be set aside in your escrow account. Just, you can call it savings account if you want. And then at the end of the year, or when your property insurance is due, we will pull the money out of that account and make that payment for you, so you don't have to worry about doing that. You do need to remember that at least for us, in December, we do an analysis, so that payment may change. Even if you have a fixed rate note, your payment can still change because taxes go up, insurance premiums may go up, and we have to kind of reanalyze that account on an annual basis to make sure we'll have enough money going into it to be able to pay your taxes and insurance when they come due the next year.
That's definitely, I would say, a benefit and just a convenience for your customers, just to not have to worry about it and know it's taken care of.
Right, definitely
Absolutely.
a convenience.
And then how long would you say, just ballpark, from start to finish, from applying for your mortgage and then actually closing?
Usually, 45 days is a pretty good amount of time. That makes it, where no one's really stressed. It's a pretty good, I would say, when you're writing a contract, maybe shoot for that time. And sometimes you can't, sometimes you're going to have to do shorter, and we try to make that happen. But people need to realize sometimes it's kind of beyond our control, because there's third parties that have to do part of the process that we don't have control over, or there could be a title issue. So sometimes things drag a little that we don't want to happen, but it does. But 45 days is a good amount of time to at least shoot for or think of.
Several moving pieces.
There are lots of
into the
moving
process.
pieces. Yes.
Aw.
Yes.
Well, it was so nice having you today.
Well,
Is there
thank you.
anything you want to add that maybe we didn't touch on that I might have accidentally missed on your notes?
Well, I just want to say on our notes, they are a little bit different. So, when we talk about 5 years, sometimes people are really afraid of that. But I said in the beginning to think about your situation. There's a lot of people that'll move here. I just talked to somebody yesterday that's moving in, and they have a contract to work here for 3 years. and they're leaving. They don't know where they're going after 3 years, but they know they're gonna have to go somewhere else. So when you have something like that, the community bank loans are really good. Our closing costs are generally a lot less than you would get with a mortgage company. We don't have to do as much because we keep the loans in-house. So everything doesn't have to be exactly similar. We're not selling them anywhere. So, we make the decisions. Our underwriting is just not the same. So it does save some money. And another big advantage is that after the loan closes, I talked about that, feel comfortable with your lender because you're going to talk to them a lot during the process. But think about after that loan closes, and who are you going to talk to then? When things come up or your insurance is going up and you want to say, hey, don't pay that premium because I'm shopping. Well, if you're with us and it works out, that you can come to your local bank, your lender is the one you go to with those kind of questions or any kind of questions. And, I do that. So when I close with my people, it's important to me. I want to have a relationship with them financially, going forward. Anything else I can help them with, I'm going to be there. And if they need to have a question answered, they just can call me, email me, stop by. Happy to help anytime.
Great, that's so wonderful. Well, we appreciate y'all as a member
Thank you.
And all of this information that you've shared. I know that everyone will benefit from. Carol, what is the best way for them to either email, call, or just get in contact with you if they have questions?
Well, my email is cpilant, which is CPILANT at cbtwaco.bank. My direct phone number is 399-6250. So
Wonderful.
You can call the main line at the bank and just ask for Carol too. Or stop by. I'm at Chapel Road.
All right. And again, this is Carol Pilant, Community Bank and Trust off
Yes.
of Chapel Road. All right. Well, thank you again for
Thank you.
joining us, and we look forward to working with y'all.
Thank you. I appreciate it.